All right. Hey there. Welcome, everybody. It is just a few minutes after 11 a.m. Central Standard Time here on Friday, the 27th of October, 2023. Coming at you live from just north of Houston, Texas on Lake Conroe. Good to have you guys checking in. PCE came out this morning in line with expectations, right? Remember, the PCE is the Fed's preferred inflation gauge, not CPI, though it seems like media just can't get enough of talking about CPI, right? So what does that mean? That means when the Fed is looking at numbers for whether they're going to, to get information about whether they're going to hike or not, or drop rates or whatever they're going to do, they look at the PCE, not necessarily CPI. So PCE came in as expected. Headline, I believe, was 3.8%, which was, I think, the same as last month. And then core CPI came in as expected at 3.7%, which was less than, it was 0.1% less than the previous month. So inflation, core inflation coming down. And that's what, that's what the Fed wants to see. So I would be really, really surprised if the Fed actually unpaused coming up with the next rate hike. I believe they'll probably stay paused. I think they're probably done hiking, it looks like, at this point here. We did leave it open for one potential more rate hike by the end of the year, but the economy does not seem to be agreeing with that. So, if inflation's coming down and continues to drop off, the Fed really doesn't have any reason to continue hiking, right? So that's kind of where we're at, guys. Now, the rest of the world's got you out there. What I mean by the rest of the world is the rest of social media has you out there thinking, oh my God, the sky is falling. It's going to be 1987 all over again, Black Monday. Oh my God, it's the beginning of the Great Depression, part 2, right? I don't think so. It's easy to say that, but these are the same people that have been saying this, guys, for the last, 2 years almost now, right? As you know, prior to the swing high, prior to the all-time high in the stock indexes, I was suggesting, I was looking at the likelihood that we might have that big one coming in. But after that, remember, we didn't get the blow off top. And with the wave degree we're at for using Elliott wave, we should have gotten one, and we didn't. So that made me cautious. And then as we pulled back, remember, we only got 3 waves back on the pullback. And I said, well, it looks like it's just a wave forward. It looks like we've still got a new all-time high coming in the indexes, indices there, to lead forward. And so, we kind of look at this, go, man, what if, kind of crazy, but what if 1920s are repeating themselves right now? You remember the 1920s, the roaring 20s, right? A lot of similarities. I hate to even go into the point of pandemics, right? Though our pandemic came around 2021 and theirs was like around 1917 or 18, somewhere around there. So a little bit difference in there. So maybe we don't get the decade. Maybe we just get the next 2026, maybe. What if we do that before we get something? And even then, guys, we don't have to. There is an interesting, if you guys know about deflation and technology, an increase in technology actually creates deflation, right? It takes out a lot of the extra work, everything everybody puts in. And it's, so that's really interesting when you look at that and go, okay, well, where are we at? I'm not saying that we can't get a large, some kind of large depression or something like that. I'm just saying there's the possibility that maybe we don't, which would be really weird. It wouldn't actually follow in with everything, but we always keep our mind open. But for right now, anyway, we're going to take a look at the stock indices today. The futures contracts for them. We'll look at the Dow. We'll look at which is YM. We'll look at NQ, which is Nasdaq, and then we'll look at ES, which is the S&P. And I'll show you what I'm looking at there. Something that I talked about could be possible for the way this wave 4 plays out. I talked about that back when we were first talking about the wave 4, a year plus ago. So we're going to take a look at that. Bitcoin doing its thing, right? Broke out higher. Not a surprise over here. Pretty much a surprise for just about everybody else out there, though. It's crazy how the largest accounts, online and social media and in YouTube or whatever, can be so incredibly wrong so many times, and people still flock to their channels, which just goes to show the people that get the most attention are not the ones that are the best. It's usually the ones who just market the best. So keep that in mind as you're out there, guys. All right. Let me see here. Who's here already? Sats, what's up, man? Man, Sats had a great trade, even on the 5-minute time frame, using Wyckoff, what he's earning over with us at TWC on Wyckoff there. I don't know. What'd you end up closing it out at, man? I know you were up like 4% on that trade. Excuse me, on that trade there using Wyckoff. So I'd like to know what that, if it's still going or if you finally close that out. Matt, what's going on? Garrett is here. Fibaswani, what's up, man? Fibaswani, I think, will be with us next week unless he has something come up in his schedule that doesn't allow him to be. But as you guys know, he joins us here every other week. He's with us there over at Texas West Capital now. Sorry, good to see you, buddy. Higher Low Crypto checking in, one of my favorite people. Let me see here. Mark Chenard, one of my other favorite people. Mark's going to be a professional comedian one of these days. I'm pretty sure of it. He's got jokes for days, I'll tell you. New Type Trader, what's up, man? He says, let me see here. What'd you say here? The Fed is playing psychological games because they know if they say we're done raising rates, the stock market will rally and create potential stubbornness with inflation. So we all know they're done. However, we won't hear from the Fed. Yeah, that's usually the way it is. The Fed, as I've often said here over the years, guys, the Fed's biggest asset it has, the biggest weapon it has is its mouth, right? So it gets out there and it says things in hopes that you'll believe them and then react accordingly. The Fed does not want, at the end of the day, guys, the Fed really doesn't want to get involved and do all this hiking and lowering of rates more than they absolutely have to, because they know they're not idiots. Everybody talks about the Fed and thinks they're stupid. These are people with PhDs, guys. They're not idiots. They're much smarter than most of us, okay? But on their end, they've got that dual mandate, which doesn't really work, as you know, right? The unemployment and the rate, interest rates, but they've got to get in there. And so, they know that if they have to go in and start moving things around, it creates issues, right? The effects are not seen for a while. We finally heard Jerome Powell talking a few months back about how he believed that we hadn't really seen the effects of all those big, strong hikes that they had starting last year, right? Something I had been talking about. But, you actually had Jerome Powell step up and say, yeah, we're going to pause. Right? As a matter of fact, I think it was right when they did their pause here earlier this summer. And he said, we still haven't seen the effects of that really. And so at least he said, at least they did that. But, at the end of the day, guys, they need you to act in a certain way. Yeah. So they use their mouth. And it's not just one mouth, guys. If you ever watch it, you'll notice that the different Fed governors will come out and they'll say contradicting things. And, and you'll usually notice, we talk about it sometimes when it's coming up to what the Fed may or may not be doing. And so they use those 2 or 3 voices to kind of moderate your reaction, to get you more, if they feel like you're being very, very one way, they'll try to use those voices to give a little bit of confusion to you, a little bit of indecisiveness, so that hopefully you pull back on whatever it is that you're thinking that they're doing there. So, it's a lot of psychological games, yeah, going on there to get it done. Let me see here. You like that? You like that guitar over there? Yeah. Well, that one. Yeah. From Eddie Van Halen. Yeah. One of my favorite guitarists there of all times. 3-Day Death Cross. What's up, man? He says, for someone just starting out in trading with a risk-averse mindset and an income goal, what key strategies or principles should they focus on? Additionally, between the Forex and crypto markets, which one do you believe is more suitable for this particular approach? Honestly, guys, everybody comes and says, oh, crypto market's different. The only thing the crypto market is different from is when it rallies, right? It rallies strong. But really, the same things apply to either one. And the same thing is going to keep you from being as successful as you could be in either one. And that thing that's going to keep you from being successful is your emotions. Okay? So being unable or unaware even that you need to control emotions, is the very first hurdle and the biggest hurdle that you're going to have as a trader. So, if you're risk adverse and you have an income goal, what key strategies or principles should you focus on? Larger time frames. Larger time frames are easier to trade. As you get to a smaller and smaller time frame, all that up and down movement is what we call noise. And that will unfortunately knock you out or confuse you a lot when you're trying to trade, right? Because people tend to go in the smaller, especially newer traders tend to go in the smaller time frames, 15 minute, even the 1 hour. And they're thinking in terms of the daily or weekly targets, some big, huge target, right? But they're on that 15-minute time frame. And the reality of it is, guys, trade your time frame. If you're on a 15-minute time frame, you're trading Bitcoin, for instance. Yes, sometimes we get the big moves, but most of the time, significant most of the time, you're going to trade your time frame, right? If you're 15-minute, you're looking at maybe $100, a couple of $100 on movement. Keep that in mind when you're trading. So, but if you're newer and you're not consistently profitable yet and all those things, and you're still working on learning and doing all this stuff, I'm telling you right now, guys, larger time frames, you should be trading a daily. You should be looking at your daily time frame and trading that, and stop worrying about all the 5-minute time frame things as well. Also, as I always say, treat your trading like a business. Have yourself set trading hours, okay? Set trading days. Make sure that you take time off. You don't trade 7 days a week. That's too much for pretty much everybody. You're going to get stressed out. It's stressful trading, and you don't maybe recognize it, but it builds up in the back of your head. And then all of a sudden you're blowing off, you're snapping and biting off your children's heads or your spouse's head. You're jumping on coworkers at work for no reason, just for something stupid, right? But it's because you have all that stress build up from watching the price go up and down. And, it seems like we're always down at some point, right? And that's stressful, especially for new traders. So create just specific hours. You're trading these days out of the week from this time to this time. And most traders don't want to do that because they think, oh my God, if I do that, I'm going to miss the move. Well, guys, the reality of it is you're going to miss the move most of the time anyway, especially if you're a newer trader. How many of y'all were long? Let's pull up a chart here, guys. Let's talk. Let's be honest here, okay? How many of y'all were long here when I said, well, looks like we're going to get up, or even waiting for the breakout of this wedge right here, or even this right here? How many of y'all were long down here, or even the pullback, or even this pullback where I kept saying you needed to be long because we're going to break out? Let's be honest. I know most of the people following me were not long. And it's not that you're terrible or whatever. It's just that it's difficult when you have all this in the back of your head, all these talking mouths and these big accounts online that everybody swears by, telling you it was going to go down. Everybody and their grandmother, it's going to go down. We're going to break 25 again. And I said, okay, you know what? Maybe we do, but here's our target. It's easy, right? But I said, until we actually get the breakdowns that we needed locally, we needed to be looking up, because that was where it was likely to be doing. Again, this ABC, right? This flat correction. How many of y'all were long down here, or even right here where we said you need to be long, right? How many of y'all started DCAing in over here in June of last year, where I said this looks like the start of accumulation? And as we get over here, I said, okay, we could get a dip down, a spring or whatever, got a terminal shakeout here. But, this was going to be the start of accumulation here. Most people, it's difficult to listen to somebody when you have a lot of recency bias from price going down for so long. And then everybody and their grandma, like I said, all these other really big accounts, we tend to associate this idea that that because somebody has 300,000 or 500,000 followers, they must be good at what they're doing. No, they're just good at marketing. Has absolutely nothing most of the time to do with how good they are. Look at Capo, right? Capo's got 750,000 followers or something like that. Dude's been saying this is all manipulated. Dude's been saying this is all a bear market rally. It makes, for those of us that have actually been trading for, almost 30 years in multiple markets, not just in crypto, right? Stocks, futures, bonds, gold, metals, Forex, all that stuff. We know better, right? At this point, if you're still saying this is a bear market rally at 130 somewhat % rally over a year, I don't think you really, understand what's going on. And I'm trying to be nice about that. I don't mean to be rude, but damn, y'all come in here looking for help, looking for something to help you, right? And that's hard in itself. It's like anything else, guys. Finding free help is really difficult. Free help that's worth it, okay? Expecting somebody to teach you everything for free, I think, is really asking a lot. If you wanted to learn how to fix your car engine, do you think somebody's going to go out there and teach you how to do that for free? If you wanted to learn to be a great classical pianist, do you think somebody's really going to come out there and teach you for free? But for some reason, people expect that, right? In this particular industry, they expect people to come out here, people that have spent decades in, learning the hard way and losing all that money along the way and learning what it takes to kind of give them everything for free. And it's kind of selfish, right? Wouldn't you say? Whatever you're good at right now, would you go out there and teach everything you knew for free to somebody? Not just somebody, but a lot of somebody just because they asked? A lot of somebodies that you don't know? I mean, you see what I'm saying? We wouldn't, because we know there's value in what we've learned and what we've become good at over that time. So you guys got to be careful out there, all right? If somebody's consistently giving you trading signals for free, understand there's a reason for that, right? I would suggest it's not because the signals are all that great, right? Because why wouldn't you charge? Right. So anyway, just thoughts here, guys. I want to help you get in the right mindset. Again, we offer services, sure, but at the end of the day, whether you join us or somebody else, I need you to understand to get your mind right so you can get the most out of the money that you're spending, right? You got to get the most out of the money you're spending. And most people they don't understand how to consume education, much less trading education properly. They don't understand where their mindset needs to be. And so they get in and they maybe pay money and then they feel like, oh, that person gypped them or whatever, but at the end of the day, it was because they weren't right. They didn't have their head right, to actually receive that education. It's a difficult thing, guys. Fibaswani says PhD equals doctorate of deception. Let me see. Let me kind of catch up with you guys here. So yeah, okay, here's the one thing I'd say. So the other question was, between Forex and crypto markets, which do you believe is more suitable? Forex markets, okay, your stocks, crypto, whatever, generally tend to go to the right and up, okay? Over time, even when they have the pullbacks, overall, it's continually higher, 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 right? Forex in general, especially if you stick to the main pairs, right? It's just sideways. It's up and down sideways. Now, it may take a decade or two to get from one top to one bottom, but basically it's sideways, right? Because all these currencies are trying to stay, in line with whatever the dollar's doing. So I would say from the mindset of, does it make it easier emotionally? Forex might make it easier emotionally because if you understand that, then you assume, when you get in crypto and stocks and everything, you're trying to buy something that you think is going to keep going up and up and up and up forever, right? And that's not what you're doing with Forex. Now, there are some outliers when the currency of a country gets really off kilter, right? And, like the Turkish lira against the US dollar, or, over there in Argentina or Venezuela or stuff like that, where it just goes off tilt. Even Kenya for a long time now has been just dropping against the USD, right? But generally speaking, especially if you stay with the top few pairs, overall price just kind of does this sideways thing. So it takes out that emotional, oh my God, I got to buy it here. It's going to go up and go up forever kind of thing. And you start thinking, okay, trades are trades, right? So that's probably something I would look at as far as that. What's up there, Ross Mark? Good to see you as always. Let me see here. What else we got? Let me see. What was that? Matt's Trades. What's up, man? Yep. Hi, he likes TWC, man. I'll tell you guys, we work hard there. It's hard when you get out into public social media stuff like that, and you got some Yahoo who comes on there who's never even been a part, right? Oh, you're a scammer, you're a grifter. No. I'm sitting here bust my butt. I was going to use some words there. Bust my butt to help make sure that people learn as much about trading properly as possible. Learn as much about understanding how and why the markets actually do like they do. And people, that we've got many of them in here, Mark and Sats and others that are in here, they come out here and they tell you guys because they've been in there for a while usually. We've got members that have been with us just about the entire time we've been here, 7 years, 7+ years. And people don't stay in there and keep paying for that if there's no value there, right? That's what you guys got to think about. People aren't going to sit there and keep paying because we're not cheap. We do have a very inexpensive intro because, again, people are kind of like, well, I don't know. Are they really serious about what they do? Are they any decent or whatever? And so we have, this new, since we moved to this new platform, we've got this $11.99 a month where you can come in and you can get our intraday Bitcoin, Euro USD, and ES1, our S&P minis charts, and get involved with the community and whatnot, really inexpensively, right? But we've only got about 70 more seats. That last week we were here, we started with 100 seats. We've got 30 filled right now. After that, the price is going to go up on that. But as long as you come in at that and you get that price, you get that forever, right? As long as you stay a member. But that's just to get you in there and get you to understand that, hey, we're not jerking around with you here. We're serious about what we do. We do have a premium group coaching membership. A bit more, but you're going to learn Elliott Wave. You're going to learn Wyckoff. You're going to learn price action. We're finishing up our intro price action course, which is going to be about ICT and my changes additions that I've added to that. And that way you can learn to trade short time frame, but you can more importantly learn to forecast. And learning to forecast gets you in down here, guys. Over here, it gets you to understand what's going on here and that we're going up higher here, right? That's what forecasting does. Forecasting, when I called that top there in April of whatever it was, 2021 or whatever it was, when everybody's laser eyes, that's what it does. But, unfortunately, people want to try and do stuff for free, and it is what it is. I understand, but I wouldn't have gotten to where I am in life if I didn't spend money along the way to make sure that I was getting help from other coaches and mentors so that I would try to hopefully miss a lot of the mistakes that we tend to make along the way. And there's a lot of mistakes we make as new traders. I made them all and some back in the first, especially the first like 3 to 4 years I was trading. So, but I learned, right? And I started putting money in understanding how my markets move the way they do, in mentors and coaches along the way. I guarantee I've spent more money than a few of y'all combined to get here, but it's worth it. They say there's this difference in mindset, guys. Somebody who has a poor mindset will look at price and they'll go, okay, well, how much does that cost? And they'll say, okay, how much is it costing me? But somebody with a rich or a wealthy mindset will look at something and go, okay, what am I getting for that? Because they're looking at the value it's going to add to whatever they're doing, right? It's not just with trading. It's just in life, with things in life. And as I often talk to you guys about, the way you are in life or the way you are in trading is going to affect everything, right? You can't just be one way in life and then expect to be a completely different way as a trader. You can't be a victim in life and then expect to be successful as a trader. Because to be successful as a trader means you have to believe in yourself. It has to believe you have to believe in your ability to do things, to affect change, positive change in your life, right? You have to believe that you can forecast, that you can make money. Otherwise, why are you even in there? If you feel like you're a victim and everything's always against you and it's always everybody else's fault, and you never learn that, right? How can you expect to come in as a trader and make money, right? So if you constantly, be honest with yourself. We're going to get to charts here just when I just want to say one more thing here though, guys. Honesty is probably the single biggest, most important thing that you can have as a trader. Honesty with yourself. Because you have to be honest with yourself so that you understand where you currently sit, where you currently stand, and where you need to be and how to get there. You can't get to where you need to be to create success as a trader if you're not honest with yourself about where you are. The great thing about being honest about yourself where you are is that you now know where you stand and you can put together a plan to get where you need to be. Until you do that, you can't put together a plan. You can't figure it out, right? I'm telling you guys, mindset it's the most important thing outside of what you're actually doing as a trader to create success in trading and in life, happiness. Okay. So yeah. Josh, what's up, man? He says, you've been calling for DXY below 90 for a couple of months. Do you have a time frame in mind for that play? I don't tend to, I usually don't tend to work out with time frames. What I found in the last 28 years of doing this is that when we look for time, we're usually wrong. It's almost impossible to figure out. Price levels are where you want to look, and then however long it takes you to get there, you get there, right? Trying to figure out a timing thing, like for instance, I thought we would just have one pullback here, one back up the edge of the creek, right? It's rare that we get two like this, but we did. We got two. So if I'd said time frames, I'd be like, okay, we're going to pop up and go up. But no, would have been wrong. Would have been over here longer. Would have been here, right? So we worry about time. We worry about the price levels rather than the time frames. We'll take a look at the DXY here, and I'll tell you what I think we're on that. Right now, we kind of hit that target area I was looking at, and it looks like the rejection is in or it's happening. So we'll take a look at that. Let me see here. Let me see. Matt's Trades. I can attest for anyone new that's listening, if you're serious about trading, TWC is a place. I appreciate that, man, for generally good education. Yeah, we try to be, man. We try to be. Fiboswani, it's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong. Man, quote of the day right there. Remember, guys, we're in the business of losing as traders. That's what we are. We're not in the business of profits. We're in the business of losing. And if we learn, the better we can learn how to lose, which means the less money you lose, the more money you're going to make as you become better and better as a trader. Does that make sense? Self-awareness, emotional awareness. That's right, man. It's some people think it's new age nonsense and whatever and whatnot. But guys, I'm going to tell you, it really does make all the difference in the world as a trader. Okay. Let me see here. Man, yeah, new type traders is what I love about the markets. They will humble you and act as a mirror to show you who you are, but only if you're honest with yourself and paying attention and accepting. A lot of traders out there, they don't. And that's why they continue to lose money over and over again. It's not that they can't do it. I'm going to tell you guys right now, all of y'all can trade. All of y'all can be successful as traders. I firmly believe this. 30 years of doing this almost now, talking to thousands of traders, teaching so many over that time. I firmly believe that any of y'all can learn to trade profitably. But I can't make it happen. It starts with your mindset and your understanding these things I'm talking about. And the reality is that trading isn't an overnight thing. It's like any other skill set. It's going to take time and effort and practice and discipline and dedication. And you have to actually learn to do it correctly. A lot of people, they learn to do it kind of half-assed, right? Because they look online, so much free information online. But I'm going to warn you, a lot of what you find online for free are half-truths, and some are even outright lies. And they're not outright lies because the people doing them want you to, they want to trick you. It's because they never learned how to do it properly. As somebody who started out like that, I'm going to tell you guys, there's a world of difference in learning to do a thing properly and learning to do a thing kind of half-assed or incorrectly. You can practice all day, every day for years doing something wrong. And all you're going to do is get good at getting wrong, right? You have to learn to do it correctly. I'll get ready. Let's jump to the market charts here in a minute. I got one more question. If you had one discipline to choose in methods of trading, what would it be if you started all over? Would it be Elliott wave, Wyckoff, price action? Just curious, and this is off topic. No, I think it's a great question, actually. So that's a hard one. I would say the most important thing about trading, like real trading, guys, you can come in here and you can do price action and make a little money trading day in and day out, but basically you're trading for income. Most people that day trade based on price action are trading for income, okay? Dick Diamond was a big one with that, right? And he explained it a lot. That's what it is. It's trading for income. If you want to create real wealth, especially generational type wealth, you have to learn how to forecast. You have to learn how to figure out where the macro lows and highs are and get in there. Okay. So from that perspective, I would say probably Elliott wave, but only if you really dive into why it works. Not so much to learn how it works, but the underlying theory. So basically, socioeconomic theory is what's been coined these days, right? Understanding how and why the market actually moves versus the way that most people think it does, the way it's always talked about on TV, on CNBC and whatever, and in your bigger accounts online. right? Where they say, oh, it's moving because of these fundamentals, blah, blah, blah. Well, no, the fundamentals, everything are already in there. They're already in the market movement that's going on there. But understanding that it comes from the social mood, from how people in the aggregate are feeling, and they show you how they're feeling by whether they're buying or selling. Okay, that to me is where it would start. Elliott Wave, if you pay attention, if you read Elliott's books that he wrote back in the day, right? Almost 80 years ago, something like that. 100 years ago almost. If you really dive in there and read what he's saying, you see that that's what it's talking about, right? But Elliott Wave helps you understand that people are forecastable. What they do is predictable to an extent. People tend to, because of psychology and emotion, we tend to act in specific ways. That doesn't mean every way is exactly the same every time, but there's a general framework. And so if you learn to do Elliott Wave correctly, you can be very successful with it. Wyckoff is great because it helps you understand, again, the emotions and the psychology going on in the trading ranges, and how the larger players, the professionals, take advantage of that. Okay. Remember, guys, generally speaking, in liquid markets, right, your big players can't force the market to do anything it wasn't already going to do. All right. What they do is they understand where you're at in your emotions and what's going on in there. And then they test you. They test you in the ranges, the tops and the bottoms of ranges, to find out what you're feeling. They're gauging your interest. They're gauging what you're feeling all the time. And then they use that information to decide when they want to go bigger, when they've decided that you're just not going to let it go down any further, when they've decided that you're just not going to let it go up any further, right? Those are when they buy. That's when they sell. Okay. Yeah, it's amazing. The emotional is it all. I used to say all the time, guys, that your charts are a visible representation of the emotions, of the movement of emotions between fear and greed. Fear and greed are the two greatest emotions that humans have. Fear is the greatest emotion of the two. So people tend to trade in fear. I wrote this on Twitter just recently. Most traders tend to trade in fear, either fear that they're going to miss out, fear that they're not going to hit their target, fear that they're going to hit their stop loss. And that causes them to take actions outside of what they plan to do. And that anytime you're trading out of emotion, you're setting yourself up to lose money. Okay. So, all right, guys, let me jump in here. Hopefully you guys have gotten something out of that. I'm telling you right now, I've got charts, guys, but this stuff that I just spent some time talking about here, this is the stuff that if you listen and you pay attention and you allow it to come in, this is the stuff that's going to change you as a trader. This is the stuff that means more than the charts. If you come in just looking for the charts, we've got them, but I promise you, without this, the rest of this, getting your head right and understanding how and why things work the way they do in trading, you're going to have a lot of money being consistent, at least with profitability. I was a very consistent loser for the first few years. Oh, Lord, was I ever. Okay, so here's the big picture. I've even got the cloud on here, guys. But, again, as we were expecting, we got the breakout here. Nice thrust. I said when we got this breakout, ultimately we'd probably get, a series of impulsive movements up to that 38 to 40,000 area at least, 42,000 area at least. I said we could, when we come in here, I said there's a good chance we could hit this kind of, this right here, this, what is this, 33,000 to this one right here, 34,340, this kind of area as potentially a stop along the way, right? As we kind of consolidated there and then head up. And so that's what's happening right now. So I'm still looking for us to break out further. I'm still looking for us to rally at least 38, likely even 42. If we look at this count here, remember, guys, same count I've had since down here at the swing low, right? We got a 1, 2, we got a 1, 2. I don't have it on this chart. Let me pull it up here real quick. Come on. Here we go. I think out of this. There we go. So this 1, 2, 1, 2, right? 1, 2, circle 3 as a minimum expected target up here, 52,400 or so, right around there. So that's just wave 3 of this larger 3. That doesn't mean we have a new all-time high before the end of the year, okay? In the history of Bitcoin, it's never made a new all-time high before halving. Usually what we make is a rally up about 78.6% of the bear trend, the bear market. And then we pull back into the halving, and then we go and we head on out. So I don't expect it to be any different this time. I don't expect us to, print 70,000 by December 31st or anything like that. But I do think we do have further help, right? We've talked about seasonality. October being, Uptober, right? I had a lot of people throwing a lot of shade on it there the first week or so of October. But look at what we've done already, right? We're doing well. November's usually just as well, if not better. And so, seasonality wise, we should continue to see this rally up, right? What else? The fact that we went sideways here for 6 or 7 months means that we should definitely be pushing out higher here. There's no reason we shouldn't, because in terms of Wyckoff, when we're looking at ranges, the longer we spend going sideways, right? The longer we spend going here, the stronger and further we break out or we break down when we leave the range. So, we've only come up here, about what? That was 10% on a rally there, like in an hour, something like that. On the breakout here, we had some good movement up here, but nonetheless, we should continue ultimately to head higher here, okay? Let me see here. So yeah, so we kind of hit this EQ here of this particular supply structure here. We kind of hit the EQ on that. You can notice we shoved right up through the low volume node here, and we pulled back. I don't know if you guys can really tell on this. Well, we pulled back here. I've got it. Doesn't have all that information on here now. We rallied up and we pulled back right about the lowest part of that low volume node here. So those low volume nodes, usually we get rejections at them, right? Here at the top, here at the bottom, right? Because the bigger players don't want to continue buying or selling into that because you're going to chase price through it. The market shows it's not interested in those areas. So if you want to find a bidder, right? If you want to find somebody that's going to buy or is going to buy what you're selling or sell what you're buying, right? You end up that you won't find them in that low volume node. So you usually hit it a few times before you break out. And that's what we did there, right? And now that we've broken out, we come back and we retest it again instead of popping back up there, right? So that's kind of where we're sitting with that. Again, looking at some consolidation here before heading up. Large candle spread here, large volume suggests this is wave 3. So, again, locally here, maybe a wave 4 of the larger wave 3. But, still looking to continue up higher here, and then pull back and then continue up higher again. Let me see here. Corey, what's up, man? I see you checking in. Yeah, guys. Hey, listen, if you're following here, I'd appreciate it if you give me a follow. If you subscribe to the channel, depending on where you're at, Twitch, YouTube, Facebook, Twitter, whatever. Hit the like button. Leave a comment. Even if you don't agree with me, that's okay. I just ask you don't act like a jerk. I come out here, and I tell you what I've learned over the last 30 years and explain to you why and how these things potentially tend to happen and where we're looking to go. This doesn't mean I'm going to be 100% correct. And I'll never be disrespectful to you just because you feel something different, right? But man, oh man, the desire of people to be so disrespectful just because somebody doesn't agree with them is so bad. But if you've got honest thoughts about it and it doesn't align with, that's okay. Let's talk about it. Maybe you haven't seen something that I've seen, or maybe I can explain it a way that makes more sense. Or maybe you can explain it to me in a way or show me something that I didn't see that may change my mind. I'm okay with that. The worst thing you can do as a trader is keep the same thought that you have, regardless of any new information that's coming in. You've got to be ready to always change your mind. Well, not always, not like an everyday thing. But when the bigger information comes in that invalidates this larger thesis, you need to be able to let go of it. again, we look at Capo, right? He's continued to be bearish all the way up 130 somewhat percent now, a year rally. And he keeps saying, oh, well, my thesis isn't invalidated. Well, when is it? He won't tell anybody because he doesn't have an area, right? Think about it. If you're trading, you should have your invalidation level. There should be a point at which you say, listen, I'm not correct here. That's what your stop loss is for. That's what your invalidation is for, is to tell you, listen, what I thought was going to happen is not happening. It's doing something different. And you do that so you can be honest with yourself. Because if you're not honest with yourself, you're going to keep making that same mistake over and over and over again, right? So yeah. What are the fibs for wave 4 of 3? Where are you talking about, Josh? What's going on, Andrew? I see you here. Josh. What are the fibs for wave 4 of 3? Like I said, I think this may be like an interior 4 here. So basically all you got to do is you come in here. Let's get down to the 1 hour here. So you had this pullback here. So if this is a wave 4, all I'm going to do is grab the swing low to the swing high. So as long as that swing low stays intact, my minimum expected, fifth wave target coming up here based on the height of wave 4 is around 36,900. I usually give it a little bit of room, maybe 37,000. That's my next level. I'm looking higher. As long as this low stays intact down here. So, again, just got to watch it. We just got a lot of this sideways here. It's not really doing anything. Really a crazy kind of count going in there. But with it, again, the idea that it's going further sideways here means, at least relative to this sideways, you're going to get stronger further breakout or breakdown, right? You can see that we have this spike of volume here on the 1 hour on this drop. So now what you want to see here is, okay, we just got to dip down and then back up, and we're here. We want to see, do we get follow through down now, right? Or do we follow through up higher? Because if instead of going down lower, if we go up higher and break out above this, then all this volume that came in here, that's a lot of supply coming in, and demand just didn't let it go down. Demand's in control, right? And we could look at this as likely being lower here, range is done, and we rally up toward, this kind of 34,900 kind of area before we break out. So yeah, we talk a lot in our coaching program, guys, which, by the way, you can do either monthly or yearly. Annually, you'll get a few months free doing it that way. But yeah, we discuss a lot, whether we're talking Elliott wave or Wyckoff or price action. I'm always reminding you and explaining about price action and volume, because that is the crux of everything I do. That price action and volume tells you to the greatest degree, if you understand how to read it properly, what is going on with the market. Does that make sense? So, always looking at that, no matter what we're doing, always the top of what we're looking at there. Andrew, what's up, man? Highly recommend to at least try the program. I appreciate that, man. Andrew was a follower for a while just on YouTube, and then finally took the plunge. And man, and Andrew loves wedges, but man, oh man, that dude's really kicking it up. He had a great target for S&P E-minis that we just recently hit. Just really great. So, yeah, a lot of friendly people. Let me see here. So we've got that. Let's look at the DXY. Okay, so again, here's the macro picture on DXY, right? And so I believe we're probably done here with this main count, okay? And I believe we've got a 1, and then an A, B, a C is a 2. And I believe we're heading down to 3, which has this 75 target down here, okay? And so what do I need? Well, I want to see some breakdown here. Now, the good thing is, let me zoom in here a bit. The good thing is we're finding rejection, right? So here was my target, 107.165. And we hit 107.050. So we had some smaller targets along the way here, but I said, if we were to break out, that would be the target I'd be looking at. And so we came out just shy of that. You can see that these are the monthly candles. You can see that in September, we wicked out above the EQ of this, the equilibrium member of this ascending channel. but closed back below it. We can see here again, we wicked out, almost hit the target, and we're doing this doji right here, trying to close right back below it, right? So it's looking pretty good at the moment here. Want to see this drop down and head down lower here. But if it does go up, I mean, it's possible we could see 109.5 up here, or even 111. But if we're getting up there, I'm going to look much more at the possibility. I'll start leaning toward the idea that maybe we've got one more push higher to finish wave C of B with this target at 125.7. Now, if you'll remember, guys, those of you that were following me back in the day, right here at this low here, I said this was the low, and I gave this 114 to 115 target, and we ended up hitting what? 114.745. If you're new and you weren't here and you think I'm BSing you, it's cool. That's fine. Just look back in social media, look back on Forex Analytics. I do quarterly interviews with them. Talked about the entire time, but that was what we were looking. We're looking low here, high up here. And then we were looking for $100 on the drop, and we got that. And we've gone sideways a bit longer than I was looking to do. Again, I don't do time. This is why, right? But nonetheless, as this kind of played out here, getting this kind of idea that we got a 1 and a 2 here, looking for the 3. Ultimately, this just looks like a huge flat correction here. You got A, and then you got A, B, C, right? And then you have C here. So you have A, and then you have A, B, C as the flat for B, okay? So again, either here or it'll go up a little bit further here if it were to break out. But, my default, my primary count is looking at it coming down. But yes, you get A, you get a flat here for B, and then you get C down here. Ultimately finishes out around 70 based upon general extensions that we look for. Could go further, could stop a little short, but basically what we're looking at for that. Mr. Lamb, what's up, buddy? I see you checking in. Mike Lamb, one of my favorite people as well. He is one of those that has been with us, I think, since the beginning, just about, if not pretty dang close. Yeah, and this man, he took advantage of so many specials along the way. He's paid off for the next few years easily. I love it. I love it. Josh says the DXY was in an ascending channel and perfectly bounced off the top. Yeah, I'm pretty close to that there, depending on where you draw that from. But yeah, right up there where you'd expect, right? So definitely, I think that top is there. I think we are coming back further here. Okay. Anyway, this is a chart I posted on social media on my X account. Again, kind of explaining things out here, right? What do we have locally? Locally, we're kind of looking at this is this swing high here. By the way, notice it's just that 50% retracement, right? That's about where we hit. Again, flat correction, A, B, looking at 5 being done here, potentially just slightly above A there. And then looking at maybe having an expanding broadening wedge here, then a WXY to finish wave 2. We got a, as you can see here, we got a great rejection yesterday. We're trying to reject further. We kind of dropped down and we're picking up a bit. It doesn't want to go, but it's just right here at this support level. So if we lose this area here right around 106.15 or so, I think that gets us a good easy move down to new lows. Wave circle 3 locally has a minimum expected target of 103.7 or 71, kind of that area there. So yeah. Let me see here. Let me see. Okay, so now the big question, right? We go, okay, well, here, let me do this first. I gave a Microsoft target on X there again. I've got a target up here of, what target did I give? Oh my gosh, let me check here again real quick. I don't want to lie to you. I don't want to give you the wrong thing here. Let me see if I can find it here just real quick. Scroll with me. You should be following me on Twitter, guys. I don't post a lot of nonsense, okay? Oh no, I gave a 371 target for Meta. Okay. Well, here you get to see Microsoft. Based on the height of wave 4 here, we have a minimum expected target right around 404.50 on that. So Meta or Microsoft and Amazon were on my watch list for this week, obviously, because their earnings. Microsoft did extremely well. Amazon did extremely well. And so, yeah, Microsoft looking good there. If we look, so I've had a count. I was looking at the idea that now back when we were looking at this being a wave 4 here, I gave some possibilities. I said until proven otherwise, we would look at the idea we're getting a 1, 2, a 3, 4, and a 5, right? But at the time, I said 2 other possibilities. I said we can get an ABC up, and if it hits at least 90% of a retracement of wave A here, so it'll be 3 waves down, 3 waves up, and then 5 waves down as a flat for wave 4, right? And so that would see us coming all the way back down here toward 3,500 or so, a little bit lower, right? The other possibility before we do that is maybe, because it would stop sooner, is the idea that we're maybe in a triangle. And so that's what I've got now. I've got an A triangle here for B, and then C for B. Looking like A may be done just about so right there around that high volume node, around 4150 area. As you can see here, 1, 2, 3, 4, 5 gives 1, 2. Oh, I'm sorry. ABC gives us 1, 2. ABC gives us 3, 4. AB, looking at C finishing up here to give us 5. And then we should have a minimum expected rally up here to around 43.75 and a quarter or so. Potentially even 44.30 and 50 cents up around this wave 4 area for wave B. And then wave C will come down toward maybe, we'll change. Well, it depends on how much further we continue dropping. We should be just about done. This is the daily. As you can see, we're here and oversold. Stochastic RSI is oversold here. I can see us starting up next week. But wave C potentially around 39.67 and 38.99 and a half or so. Targets looking at it coming down there. Everybody's saying, because we're breaking down here, right here, that's why everybody's saying it's the end of the world. Stock market's going to crash. Everybody, God, man, this last month, I don't know how you guys do it if you sit there and pay attention to all this stuff. It's so, if you don't know what's going on or have an idea what could be going on, if you don't understand markets, if you don't have frameworks in place for forecasting, I mean, the amount of just terror that's being put out there is enough to drive you insane. You get so scared you don't want to get in anything because you're so scared. What if they're right, right? You start buying ammo and beans. I got lots of those anyway, but that's beside the point. But the reality of it is, guys, there is a lot of sideways here. Look at this. All this sideways here. As you can see, this is the highest volume node where the market is most interested in. This right here looks like just about tied for second right here around 39.67 or so, with up here at 4,400. So, right now what I'm looking for is an A around this area, a B back up, and then a C coming on down. And then that finishes wave C. And then you'd have 3 waves up for D, make another lower high, 3 waves down for E, not where these are right here. I just got to pull the other side. But yeah, A, B, C down for C, A, B, C up for D, A, B, C down for E, and then pop out for wave 5. And that could take a while to do, guys. That's not something that'll play out overnight, right? But again, when you have frameworks and you understand, the possibilities of movement based on, just the way that humans are in the aggregate, right? There's nothing. Why would we freak out here? If you're going to short, okay, you're shorting, but you're shorting with an idea of what you're looking at. If it does turn out to be the end of the world, everything goes crashing, well, you're fine still. But if it turns the other way and does this other thing, guess what? If you think it's the end of the world and you believe everything's going to crash and go to hell, you are not prepared for anything else. And you're going to lose a lot of money. Right? Does that make sense, guys? Oh, you think I'm kidding? I got lots of ammo, lots of guns, lots of beans. Hey, if it's blurry droid, click the little gear sign down at the right-hand corner of your YouTube thing. Usually it defaults to something really bad, like 420 or something. Just go in there. I always stream at 1080, so it's always high def on it. Just YouTube tends to usually auto default down really bad and looks all blurry. So you can click that and you should be good. Ammo and Bean sounds like a bad name. You guys are a mess. Fibaswani says Amazon makes more money in a quarter than most GDPs of country, right? Have I done any work on Bitcoin miners like Mara? Yeah, I've done Mara, Riot, all those. Again, they generally are going to follow with Bitcoin, right? So just understand that when you have those Bitcoin adjacent or Bitcoin relevant stocks, MicroStrategy is another one. Basically, now they're not going to move. They're not going to follow the exact movement for movement. GBTC being another one, but they're going to follow generally in the same idea. If it's going up, it's going to go up. If it's going down, it's going to go down. If it's going sideways, it's going to go sideways. So as long as Bitcoin's rallying in general, you should expect your miners to rally as well. HUD 8, Clean Spark, stuff like that. Yeah. As a matter of fact, let me pull up MicroStrategy real quick because I talked about this earlier. I've talked about this a few times on Scott's show that I do on Wednesdays with him. We had, matter of fact, we were back over looking at this area here. This was a few weeks back, and I had shown him this, and I was looking at 5 waves up for MicroStrategy, looking at it to continue to hold this support here, and that's what we've gotten. Yeah, if I look at here real quick, this looks like 1, 2, 1, 2, 1, 2, 3, 4, 5. Or it could be, this is the daily. It could be 1, 2, 3, 4, 5. Gives us 3, 4, 5. Let me zoom in. Oops, let me zoom in a little bit here. I hate when they put these prices on there. A bit too much information. All right. So yeah, I go 1, 2 here, and then 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, 1, 2, 3, 4, 5. Yeah. Let me get in here and write it down. God dog it, I just lost my count. So basically the count looks like this. 2. We'll do it that way. And then we'll go in with a 1, 2 right here. And then we'll go in with a 1, 2 for the heading for the setup for the breakout here. Overall, I'm looking, based on the height of wave 4, I'm looking for a target potentially at 621.70. Let me see here. 326.75, 326.46. Okay. Let me see here. Let's see here. So we can go 3, 4, 5. Oh my God. It's a lot of overlap in this. Let me zoom in a little bit more here. 1, 2, 3, 4, 5. We'll probably get a leading diagonal out of this. This is probably 1, 2, 3, 4, 5. Leading diagonal. And then that'll get us, where's that 1618? Right about there. Okay, so yeah, what we're probably looking at here is 4. This might be 4 here. Actually, it looks like a flat. It looks like A, and then A, B, C, and then 1, 2, 3, 4, 5 maybe here. Pull back. Yeah, we're only at 38.2 there. We could kind of fill in this gap and hit the 50 plus here. Where's that volume coming? It came in on this one. We'll just say if it goes from here locally, We'll look at 481.11 to give us 5 of 3 of 3. So, you know, this kind of aligns with what we're looking at with Bitcoin, right? If we're looking at a third of a third of a third kind of thing going on, that's kind of the same thing we're looking at here. If it does happen, we'll just do 481 right here. If it does happen to come on down here to, well, it shouldn't just stop midway. It should fill in the gap here. We're probably looking at about 500, 497 or so. 500 is the next target on that. Depending on what it does here. But yeah, looks pretty good. We got a 1, 2, 1, 2, and then we're working on, you know, again, 5 of 3 of 3 here. Head up higher there on that. So we'll see. We'll see if they lose this here or if it continues up. Like I said, if it does lose it, most likely it's going to come on down here to that R2. Right now, it's the hourly R2 pivot, but that actually ends today. So, yeah, but we'll come on down toward this area and then look for that further move up. Let me see here. What else did we have? So there, I showed you ES, YM, which is the Dow, which is the Dow Futures. You kind of zoom out here a bit. We've got bullish divergence showing up on the daily and the R4 as we're kind of making this low here. We're pushing down. Yeah, it looks like we're just gonna sell hard today into the end of the day, or maybe close to the end of the day. We should rally on Monday, guys. But yeah, so again, the idea, we've got this ABC, ABC, ABC here, finishing this diagonal, as you can see. Gives us wave 1 of A. And again, wave B coming up toward that wave 4 area. Right now, it's the daily pivot right there around 34,212 or so. And then wave C should follow down lower. But again, looking at the same idea. ABC down, ABC up for B. Working on A of C now as we continue to work on the triangle, right? Jay can play. What's up, man? He says SQ has a gap down doji candle today, currently looking really close to bottom, if not already. Yeah, in my opinion, he says, yeah. Look at a lot of your charts. If you're trading stocks today, guys, look at these, especially these tech ones. A lot of them getting this this low in today, looking a lot like the indexes here, looking like they're just finishing out the rest of the selling at the end of the week, and then they should be buying, you know, at the beginning of next week, I would think, to rally up. So be watching that, okay? Let me see here. And again, you know, if we look at those, well, here's the thing. If we're looking at, I've got a NASDAQ chart here as well. There we go, NQ. It's different, right? Look at that. If I'm looking at this, it looks like we've got basically a 1, 2, and then a 1, 2, 3, 4, just around the 38.2 pullback, right? To finish a WXY correction. So ABC, ABC. We got 1, 2, 3, 4, 5. So based around this area here, we should be looking for wave 5 of 3 to come on up there around 17,364. Now, why would the NASDAQ be different than the S&P and the Dow? Because we know the Magnificent Seven would have been basically holding up the markets for the last year. And leading into it, remember the NASDAQ leading into it, I told you before we hit the all-time high to watch the NASDAQ, because that was going to tell us when the other ones were going to turn, because it had been leading, right? So when it finally crapped out, when it finally had enough, it was going to turn down, and we'd see the same thing with the Dow and with S&P, right? And that's what happened. The NASDAQ is still leading. So whereas, because the NASDAQ is very tech heavy, right? It's extremely tech heavy. S&P is somewhat tech heavy, but still has a lot of other stuff into it. The Dow is you know, again, the much more diversified, right? So of course they're going to look somewhat different. So you have triangles there for the Dow and the S&P. You have continued movement up here with the NASDAQ. And as you can see, we're just about oversold here on the daily. Weekly, again, still looking strong on the weekly here. I mean, you know, if you're sitting here saying this looks like the end of the world, I don't know what to tell you, right? I mean, that's kind of crazy if you think about it. Look at how high we are here. So we kind of got this support area just a little bit lower here. You can see a lot of volume coming in today, a lot coming in yesterday. So we got a lot of volume coming in. You know, you usually get your capitulation on that C wave of an ABC, right? Sometimes it'll come in B and then you'll have a small C, but usually it comes in C. It's the last move. And if you have a WXY, it comes in C of Y. But what do I want to see for this target up here? Breaking out above 40. Let me see here. Let me kind of get back in here. If we can break out above 14,948 and 3/4, that should signal that wave B is complete. And if wave B is complete, that should signal that wave Y is complete. So we should be then looking at wave X, 15,719 and 3/4. If we get above that, that signals that this 3-wave correction is complete. And we'll look for that target up there. Now, again, we could get a triangle. We could get 3 waves up toward the swing high up here, and then 5 waves back down to get a flat. We can still do that. The same thing I warned about is we were getting, you know, at the end of the C wave for everything here, right? When I talked about 4th waves. Same thing still possible here. But for right now, we're 3 waves down. So we look at that second wave on the rally, which is X. Breaking out above that says 3 waves down is complete. It's corrective. Whether it goes 3 up and then 5 back down and then breaks, or it does a triangle, 3 up, 3 down, 3 up, 3 down, and then breaks, it's corrective. We should expect overall price to be printing higher there, not coming way down here, right? So again, markets crashing, end of the world, Great Depression on steroids, 1987 all over again, Black Monday. No, I don't think so. Right now, I mean, now, obviously anything can happen. New information come in, we can change what we're thinking about. But for right now, there's absolutely nothing happening here that suggests that. And as a matter of fact, the things that are happening suggest otherwise. So we'll keep looking at that until something different happens. In either case, if you're short with a triangle going down, you know, you're short, and you're short because you think it's the end of the world. I mean, you're still short either way, right? If it plays out, you're good either way. If it doesn't play out and the triangle forms or something, right? Well, if you think it's the end of the world and it's going down, then you're screwed. You don't know when to get out of your short, because everybody's going to keep telling you, like Capo has done for the last year, that it's got to keep that it's a bear market bounce kind of thing, right? And the market's still bearish. We're going to go down. You know, again, guys, being a trader is not about emotions. It's about staying away from the emotions. It's about being logical and understanding, but it's difficult to do at first. We all have limiting beliefs. We all have things in our head that keep us from being successful as traders. These are past traumatic events that have happened. And what goes on is, when we're under stress in trading, these traumatic events play themselves in the back of our head. And that's what causes us to be emotional or to act on our emotions as traders. So you have to get beyond those limiting beliefs and those past traumatic events to have a better chance, to have a good chance at not actually trading emotionally. Let me see here. What else I want to show you? I want to talk about real quick here Sol, guys, because I've been talking about Sol since way back over here. Same chart I keep putting out there, guys, that I keep posting. Again, if you're not following me on Twitter, you know, X, I post these charts like this and update them. You know, I've done this for this. I've done it for Link. You know, we're calling all these bottoms, right? And so here we go. We've broken out higher now. I think we may be getting toward the end here of this rally. Man, it's you know, it looks like 1 2 and then 1 2 3 4 1 2 1 2 3 4 5 3 4 5. So 1 2 3 4, maybe a 5 and a 4. We might get one more out for a 1 2 3 4 5 kind of thing. You know, we've got this resistance right in this area right here that you should be interested in. And that's about $37 to $38.50. So I could potentially see us maybe reaching that area before we get a pullback. There's a good chance of that. But ultimately, we're headed higher, guys. Wave circle 3, again, 1 2 1 2, just like Bitcoin, right? Minimum expected wave circle 3 target at 78.25. And then I've got a higher target here at 111.35. Stop listening to people saying, oh, Sol isn't going to do anything because, SBF or FTX or whatever reasons. Stop listening to people talking about fundamentals. I keep warning you guys, if you're going to do fundamental analysis, first of all, you have to understand how to do it correctly. Then you have to come to the correct outcome. Then you have to decide, you have to figure out what the correct result of that correct outcome is going to be. A lot of places along the way to get it wrong. And most people do because, especially with fundamentals, you're driven by emotions. People are surprised when they look at in school, in college, right? If you've been to college, you know you have to, especially been to masters or PhDs, right? You have to do research, right, and provide research, and you have to look at journals and stuff, right? And what we find though, you'll go in there and people will put anything and it looks good, right? And then somebody come and disprove whatever, and they'll say, okay, why isn't that working? Well, the problem is when people are going to ask the question for the scientific method they're using for their research, right? To create these research papers that they, submit to the journals, right? They ask the wrong question. So in philosophy, you can ask the wrong question and get the correct results as an answer to that question. But ultimately, your answer can still be wrong, right? You have to ask the right questions to get the right answer that you really need. So a lot of people, when they go to do this research, they ask questions based on their emotion, what they want to happen. And then they go and prove their the question they're trying to answer there, because that's their goal, right? They don't, subconsciously, they don't understand this. And I bring this up because when it comes to fundamental analysis, it's the same thing. You're asking questions based on your emotional bias. And so then when you look at the charts or you look at the fundamentals, you analyze them in that framework that will get you most likely to say, oh yeah, right. What I think is going to happen is going to happen. And it's really difficult to do. We're human beings, guys. It's really difficult not to do that. And some people, they do the same thing with technical analysis, right? It's just with technical analysis, it's a lot quicker, a lot easier to figure out where you're wrong, especially if you learn to do technical analysis correctly, right? Invalidation and validation levels. If you're doing that, a lot of times, guys, I'll tell you, learn Elliott wave, because Elliott wave is a system of rules. You know for a fact that if you think something is wave one here, if you think this is wave one and price drops below where wave one starts, you know for a fact you are wrong. That is a clear invalidation level. You know it. Okay? You don't have that same thing in fundamental analysis. All right? So yeah. So again, looking for the larger move up here towards 78.25, and eventually 111, and continuing up above that for Sol here. Ethereum, Bitcoin. This is an important one, right? We've been talking forever here, it seems like, about this. And so, again, we were looking, if we got that drop to 78.6, we were looking for this kind of this EQ of this green demand structure here, the S1 pivot on the weekly. We still dipped a little bit below that. Nothing's really kind of flown out of this yet. But we do have ABCs here, right? We've got ABC is 1, 2, ABC is 3, 4, ABC is 5. So the only thing I need to check real quick is to make sure that that wave 3 is not the shortest of those 5 waves. Let's see. Nope, it's short. It's longer than wave 1 here, just a bit. So I don't have to worry about measuring wave 5. So potentially, ending diagonal here could be correct here. And that's, of course, is the idea that we've got A here, and then we've got B as a triangle, and potentially this coming down. Really based off the fact that it looks like we really have 1, 2, 3, 4, 5 here. This does look like, again, an ending diagonal here. ABC is 1, 2, ABC is 3, 4, ABC is 5, right? So looking for this rally here, you can see that weekly is down here and oversold pretty well. We're bottomed out, Stochk RSI, right? So we're looking for this rally up. We need a breakout above wave 4 here at 0.06467868 to be that first real clue that may be complete there. We're heading up. Now, this doesn't mean that, Bitcoin and Ethereum can't rally at the same time. What it means is, Ethereum rallies harder. Remember, guys, Bitcoin and Ethereum both hit that low in June of last year. And then Bitcoin, that was the low for Ethereum. Bitcoin ended up making the terminal shakeout there with the FTX thing in November. But Ethereum continued up without it, remember? So the idea, the really negative kind of idea that, oh my God, Ethereum's dropping against Bitcoin. Well, yeah. Ethereum rallied up without Bitcoin. It's right here, right? As Bitcoin was going kind of sideways, making lower highs, and then broke down in November. But look at this. So, of course, it's going to come against it. But now we just want to see if we can get this rally from here, right? So this would be, as we look at this, what we're looking at is, you see the volume coming in down here, right there? I don't have volume set up on this. Give me a minute here. Let me set it at the top. Let me see here. There we go, volume. So the volume here, as you can see here, is 13.453K. Volume right here is only 3.72K. So in terms of structure, when you're looking at that, that's important, because what that means is you had heavy selling into the low here, and they're getting an opportunity to do it again here, and volume's like a third. This is very important because usually what that means is that supply is exhausted. Supply is exhausted, can't make it enough to push it down lower. You're getting a higher low on lower volume, and you usually see a reversal on that. So it'll be interesting to see how the next few weeks go here with this. Let me see here real quick. USD yen, this is something that's important to watch as well. So we got the breakout. It hit our initial target right here at 150.691, went just above that at 150.777. Good rejection showing off here. We want to see an impulsive breakdown through this ascending channel EQ, and also through this, this daily pivot won't be here anymore. But I will say right through this swing low right here at 147.273. If we can get that, that's going to be the first hint that top is probably in, and wave circle 3 is in the process down lower. From that point, our checks along the way are wave circle 4 here at 144.439. The larger degree, wave 4 here at 137.235. Breaking down below wave B here at 129.638 is going to add confidence to the count, and really say there's little to no reason to actually believe that wave 3 is not already in progress. So, if this is dropping like this, that would coincide with the DXY being topped out and coming down as well. So we'll see if we can get it. You can see, man, just days and days of just these little tiny dojis sideways, sideways, sideways. Finally gets a chance to break out. And then you get this volume, this little spike of volume here on that swing high. You print a doji, which means indecision. And now you're getting this bearish engulfing candle. So you want to see this close like this today, and then you want to see next week start out and continue to follow through to really suggest that's done. But really, we're kind of above this ascending support line here. We've broken down through that, if that interests you, as a price action reason to potentially go short on that as well. Oh my gosh, running out of time here, guys. Let me see here. DG, this is that one I did on Scott Melker's show. Again, it was this Wednesday right here, October 11th. And I said if we could hold this here, that we'd be breaking out higher and heading higher. And there we went. It's been a great little rally so far. Doing well. Well, there's my wave too. look for it to continue higher ultimately. Right now, looking for a gap fill up here at around 154.5. And of course, that's off this low down here at about 100, 101, 102. And then once we get beyond that, then we're looking for this gap fill up here at around 200.5, $200.50. And if we're up there, the odds are this larger count is correct, and we are heading up higher overall. You can see that we had a pullback here. We've got a flat correction, and we had a pullback just beyond the 65, right into this low volume node right here. So again, good expectations coming off. We printed a huge, on the weekly here, bullish engulfing candle. Fall through the next 2 weeks. RSI is just now starting to peak out. Stoke RSI is just above neutral there. It's bullish. Again, weekly looks great. We got a fair value gap on the weekly here right around 154.98. So if you're on the weekly, once you're getting up into that fair value gap, that'd be a good target on the weekly. But again, I'm still looking at those gap targets in there, kind of fill in for that well, right? Mike says, I'm under the assumption that altcoins will not retrace their 90% losses till Bitcoin is well above 40,000. Yeah, so right now I think you're starting to see the semblances of some of them starting to prepare for bigger moves up. But I do think if we've got this Bitcoin rallying like we expect up into 40, I think you need to hit that kind of 40 area, 38, 40, 42. You need to hit up in that area before you get a decent pullback for Bitcoin. And then that's when alts are unleashed and they kind of pop. So any idea on the USD 10? I think I've got, what did I do with it? I should have had it here. Let me see. I'll pull it up here real quick. I got to go, but let me see. Come on. I don't remember what I put it under. Where is it at? I think I did under 10-year. There we go. Is this what I was looking for? I think this might be the one. I really got to label my charts better. Yeah, I think this is it. So again, same charts I've shown you guys before, and I've shown on different different shows and whatnot that we've had. Let me get some of this other stuff out of the way here. It's just easier to see. So again, I had the 4.97 target. We hit 4.997. And that's for the 10-year Treasury note yields, okay? For T-bond futures, which are your 20-plus year, you can see that we're almost the 78.6 on the retracement, S1 pivot on the monthly, bullish divergence on the monthly, a lot of volume coming in. Look at these different. We still got a few days to go next week, but if we look at the size of this candle spread, look how much larger it is than this one. And this one, though, the current one, we have more volume, right? So much greater effort, much less results suggest that we're probably going to get a reversal coming on here. And that aligns, again, with the bullish divergence, with the S1 pivot as the handle there, as the kind of like the support. If we were to break out higher here, I could see 5.147 maybe, up around in that area for like a final push up. But we'll see if we get it right now. Again, we are printing bearish divergence at the moment. We'll see if it completes like that. Again, this is the monthly. Like this is the monthly. If we take the weekly, though, you can see that the weeklies already print bearish divergence heading up there. We're trying to follow it overbought on both of them. 1, 2, 3, 4, 5 at the R1 pivot on the daily. Yeah, so I mean, I think we get that pullback, we get that complete. And we look minimally, at least down here around 3.279 for yields on 10-year. So yields going down, bond prices going up. Well, it should be. Prior to only since about 2000, so the last 20 some odd years, have we seen bonds and stocks kind of diverging most of the time. Prior to that, in the 80s and the 90s, we actually saw bonds and stocks moving together a lot of the times. And it has a lot more to do with the interest rates and the economic backdrop and what's going on with all that. Not just the interest rates, but oh my gosh, all the different monetary stuff coming out, like QT and QE and all that kind of stuff, yield curve control, all that stuff really is what kind of says it. So I wouldn't go on and say, oh my God, bond prices are going up, so stocks have to drop. I wouldn't jump out there and say that right now, because we got a lot of crazy, interesting stuff happening, with what the Fed is doing. And, it looks like stealth yield curve control may be coming in instead of sell-offs, with treasuries and stuff like that. So a lot of interesting stuff going on at the moment. So I wouldn't necessarily assume that just because bond prices are going up, that means that stock prices have to go down, okay? So there you are, guys. That's it. I'm going to get out of here. It's 12:30. I got to go. If you're in the mentor program, remember, guys, we'll meet here in an hour. I've got I got something special for you guys today. A system that I've been working on. Again, that's part of the stuff that you get in the mentor program, right? Choose to use it or not, that's okay. But I think you'll like it. It's pretty interesting. As always, remember, the only thing you control in the market is how much you lose. So please keep working on that risk management. I appreciate you guys sitting here with me through this, going through these charts. I hope you paid a lot more attention to the other stuff I said, especially at the beginning, than the charts, because that's the stuff that is really going to make the difference of whether, if you have a chance of becoming a successful trader, consistently successful, profitable trader or not. All right. We'd love to have you over at Texas West Capital, members.texaswestcapital.com. Again, we got about 70 seats, or if anybody bought here, I don't know. But we had about 70 seats left at the $11.99 a month price. You can get in there. You can choose to add different charts or different groups of charts and other things that we have if you want once you're in there. If you decide you want to join the group coaching, I've still got a few for 50% off. So you'll have to send me an email, christopher.inks@texaswestcapital.com, if you want to get the link for that, okay? All right, you guys are amazing. Thank you so much for joining in. The only other thing I tell you guys is, hey, listen, when it comes to trading, don't take a trade just because there's a chance. Always look for the higher confidence trade. Look for something that has a few things happening that make it more likely to be correct than not. And that way, a lot of the bad trades you're taking are going to be not taken anymore, okay? Which means there's less money you have to make up, which means you have a greater chance of being profitable. All right, guys. Man, oh man, y'all have a great weekend. If you're in TWC, we'll see you guys over there in a bit. If not, we'll see you guys over in social media. And again, next Friday, we'll be back 11:30 a.m. Central Standard Time, all right? Thanks a lot, guys. Y'all take care.